Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. And leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to the Investment Banking Leaders Podcast and best of luck on your growth journey. We have another tremendous guest for you today, an IB and consumer titan, and I'm beyond excited to be joined by Shaun Browne, Chairman Consumer Group Europe and Co-Head of Corporate Finance Europe at Houlihan Lokey in London. Shaun began his career as an accountant at PwC in London, but also worked in Johannesburg and then moved into a training role before helping to establish their corporate finance team. His next career move saw Shaun establish himself as the CEO of HSBC Investment Bank in India, setting up their investment banking arm and seeing huge success and growth across the 4 years he was there. Upon returning to the UK, Shaun set up the consumer investment banking division for HSBC in Europe. But Shaun's unique journey didn't stop there, and it took him to set up his own boutique advisory firm, McQueen, which was focused on consumer M&A deals across Europe. Shaun navigated the financial crisis and built a tremendous firm, which caught the eye of Houlihan Lokey, who acquired McQueen and their team, which ultimately formed the nucleus of their new consumer advisory group. And since the acquisition, Shaun and Houlihan have seen rapid growth as well as success. In his current role as Chairman Consumer Team and Co-Head of Europe, Shaun is a member of the European Exec Committee, which drives strategy and vision to ensure Houlihan continue their unique growth plans. And he also still works extensively on transactions. From spending time with Shaun, I've learned how his ability to reinvent himself, build strong teams and cultures, as well as empower leaders and really listen, have been the keys to his success. He believes everyone has an interesting story to tell, and we're lucky to hear his story today. So welcome to the Investment Banking Leaders Podcast, Shaun, and thanks so much for joining us.
Pete, it's an absolute pleasure. Thank you very much for inviting me to join you, and I'm very much looking forward to the next 45 minutes.
Excellent. Let's get into your story then. So before we do that, why don't you just start with telling our audience a little bit about Houlihan Lokey and what you do for your clients?
Sure, be delighted to. So Houlihan Lokey was founded in California in 1972, which means we're a relatively new business. We were initially founded as a valuations business, and it took us over a decade to realize that you could probably make higher fees from selling a business than from actually valuing it. So we moved into what is now called M&A, probably only in the late 1980s. It was a huge success. We grew very rapidly. And by 2000, we had become the largest investment bank in North America by number of completed deals. So that was a spectacular growth journey from the late 1980s to 2015. We've always focused on the mid-market. Now, the definition of mid-market has probably moved a bit over the years, but is broadly in the region of 100 million to a billion. And when you're doing deals of that scale, you don't really need a great international presence if you're an American investment bank, because there's just so much money, whether it's private equity, high net worth individuals, funds, or trade in North America, that you can actually complete most of the transactions without any international offices. But having hit number one in 20, the big European expansion started. And over the last 9 years, we've grown the business very dramatically in Europe as well. So today, when you look at the firm, we are 2,500 people in 36 offices around the world. We're listed on the New York Stock Exchange with a market capitalization of just under 11 billion, and our revenue is just shy of $2 billion. What's a little unusual, perhaps, about our business is that all of the revenue, the full nearly 2 billion, comes from advice. So we don't lend money, we don't underwrite, we don't take equity positions. We purely provide advice and then send out bills as advice. The business is 70% or so corporate finance, about 10-15% valuations, fairness opinions, and about 15% restructuring, which is when the business has got into some difficulties and we come in to help rebalance, sort out the balance sheet. And that's the business and the part of the business I work in.
Amazing. Thanks for the insightful introduction to the firm there, and congrats on the rapid growth. Exciting, as you say, from the 70s to where you are today. That's super impressive. And I'm sure we'll touch on leadership and a bit about how you and many of the team there have helped shape that. Before we do that, please tell the listeners something unknown or unexpected about you.
Okay, well, I've got a couple of things I can offer you, Pete. There. So one is that I was a cowboy for a year. I spent a year.
Okay.
I spent a year in the Northern Territory in Australia between school and university, where I mustered cattle for the vast majority of that year. I wasn't a great horse rider before going out to Australia. I did take a few lessons before going, but they were very kind to me when I got there, and they gave me a relatively easy horse, which was pretty docile. I must confess, though, that I was young and headstrong. I was 18 at the time. I wasn't really adding a huge amount of value on this cattle farm. And after about 3 weeks, I think I made a stupid comment about how I was possibly the only person in the team that hadn't actually fallen off in the preceding 3 weeks. That was a big mistake. I think the following day, I was given a different horse that was called Infer. I had been a former fucking Bronco beast, hadn't been ridden for about 3 years, and it threw me off quite a lot. So I learned from my experience.
Keep it down. Yeah, I traveled and spent time in northern Argentina and went horse riding. I've got no experience of riding horses. And they asked me how experienced was. And I said, I'm mildly experienced. And they gave me a horse where I just hung on for dear life for most of the time. I could definitely sympathize with that. Okay, excellent. I mentioned at the top that your background was originally an accountant and then into a trainer. So I'm interested to know how you feel this prepared you for life as an investment banker.
Well, I think it was two different things. So at Pricewaterhouse, initially, I did 3 years of working in audit. I wasn't a very good auditor, I have to be honest with you. I felt that I was better equipped as somebody who was looking forward, whereas with audit, you're looking backwards at where businesses have come from, and that wasn't really my style. But learning about financial statements, doing all the training, passing the AEW exams has been absolutely the bedrock of anything that I may have achieved in my career as an investment banker. I think that knowledge of how financial statements, how cash flow, how P&L accounts, balance sheets are put together, some of the tricks you can play is really helpful if you want investment banking. It also taught me at a relatively young age about hard work and the need to put in the hours. And that's certainly been something that has stayed with me through my career. The 18 months I spent in the training department taught me very different skills, but just as valuable. It taught me presentation skills because I was up on my feet presenting to groups of people and to classes most days. And presentation skills are invaluable, particularly as you get more senior in the organization. But I learned about counseling. I learned about mentoring, giving feedback. I learned more detailed computer skills than perhaps I had, and a variety of other skills have become softer skills than the pure financial hard skills, but invaluable nonetheless.
Amazing. Thanks so much. And I can see why that would help to build a bedrock of skills towards leadership and stronger leadership. We talked about your journey, setting up your own firm, setting up investment banking in India, lots of different facets to your career. And you shared with me that you've reinvented yourself several times. I think this is a super interesting topic. So how did you do that successfully?
I think the first and most important thing is you've got to have a bit of intellectual curiosity, and you've got to have a sense of fun and enjoyment. And I think those are really important life skills as well as business skills. I think you've got to believe in continuous learning. I still do. I learn every day. And as you can tell, for those of you who are not listening on the podcast, but watching on YouTube, I'm not in my first flush of youth anymore, but I still believe passionately in continuous learning. I also think that many of the skills that you pick up from each role become building blocks for the next role. So your communication skills, your organization skills, your financial skills, team building skills, and a topic I'm sure we'll come on and talk about later as well, which is your listening skills, which I've always believed is a key attribute for anybody in our industry.
Yeah. And could you tell me a little bit about when you came back from India and you ended up transitioning back into London? You shared with me you had to reinvent yourself there. Can you talk a little bit about that time and the things that you did that helped you have success?
Yes, I can certainly talk about that. Just to put it in context, I had spent about 3 years traveling to India once a month. And then I spent 3.5 years or so living in India. So I was quite well attuned to the Indian investment banking industry, Indian companies, Indian processes, practicalities. I was I'm honest, I was quite knowledgeable about the Indian investment banking market. I had a number of approaches to HSBC to ask me to join them and head up their activities in India. And for loyalty to HSBC, I had turned them down. But then I came back to the UK in 1999 for family reasons. I had three very small children and a fourth on the way. And it was important for them to be back in the UK and grandparents and so forth. There wasn't much demand for an Indian specialist sitting in London. So I had to reinvent myself, and I talked to the then chief executive of HSBC Investment Bank, and the firm was moving towards a more sector approach towards investment banking. I think we had 3 or 4 industry teams at the time, at media, oil and gas, telecoms. And this individual, Pete Harris, said, I want to move to 8 or 9 new industry teams. Would you be interested in taking the helm of one of them? And I chose consumer. I chose consumer for a number of reasons. One was that I had a view on it. We all have views on consumer. We all go into supermarkets. We all use restaurants. We all go to the theatre. We understand retail up to a point because we're all consumers. So I felt that I wasn't coming at a competitive disadvantage. If I'd chosen, for example, healthcare, I might have been up against a bank that had qualified in the medical profession. Or if I'd chosen mining, I might have been up against somebody who'd studied geology. And by this time, of course, I was in my mid-30s and I was reinventing myself as a consumer bank. So that's why I chose consumer. I thought if I'm up against somebody who's qualified as a chef, I've probably got a decent chance of winning business against them.
That's amazing. And then did you use your knowledge of India, your time in India in any way, your expertise there to help you build the consumer arm in the UK, or was it just too far apart?
No, I absolutely used the Indian expertise because I had to. I sat down, I can remember vividly, I sat down in April 1999 at my desk at HSBC with this grand title of head of consumer, but not being a consumer expert at all. I was really building up my expertise. And I thought, how am I going to do this? So I drew up a list of all the consumer companies. And then I thought, what can I go and talk to them about where I have something valuable to add to them? And of course, the easy answer to that was their activities in India. So I went to Unilever to talk about what they were up to in India. I went to BAT to talk about what they were up to in India, and so on and so forth. And I knew when I got those meetings with the head of M&A or the head of strategy, respective target companies, I was always going to have much more knowledge about India than they did. And if I had a view about acquisitions or joint ventures or divestitures or financing or IPOs or something relevant to them, that would get me in the door. And once I was in the door, it was up to me to take the conversation in the direction after we discussed India, where we're discussing what their strategy was elsewhere in other geographic territories, what their financing ambitions were, etc. And hopefully be able to build from that. So the 7 years I had spent being Mr. India for HSBC were very definitely a useful bridge for me becoming a specialist consumer.
I love that. I love that you reinvented yourself and you picked an area that you had some knowledge about and where you wouldn't face a challenge with others who were experts from their university or their training. And then you used the expertise you had in a different way and the hustle to get in front of those companies. So I love that. Really good advice there. You've already touched on listening. I'm sure getting in the room with those large consumer companies, you had to listen a lot to move it to the next stage. So can you talk to me a bit about the importance of listening for you to succeed in your career and then how you honed your skills? I think they're the 2 key areas that'll be super interesting for the audience.
Yeah, the first point I'd make is that I think listening is a life skill. So it has huge relevance, not just in work, but outside work as well. As somebody once said to me in an early stage of my career, you have 2 ears and you have 1 mouth. Try and use them in that proportion. And that individual was spot on. Too many meetings I've gone to, people have been on transmit rather than receive. And I think if you go to a meeting, you've got to come out of it feeling that you've learned something rather than you've just passed knowledge on to the other side. We are corporate finance advisors. We need to provide solutions to the issues facing our clients and to listen to our clients when they talk about their business and they talk about their challenges so that we understand what those challenges are and we can go away and come up with some solutions. I'll tell you a story if I may. I went to a meeting relatively early on in my career with fellow colleague, and he was an expert in a particular subsector. And in the meeting, which lasted for an hour, he barely drew breath. He talked about his particular area of expertise to this prospective client for an hour, virtually without stopping. And we came out of the meeting at the end, and he looked rather pleased with himself and said to me, "Shaun, I thought that went very well. What do you think?" And I said to him, "If I'm honest, I thought it was disastrous." And he was rather shocked. He said, "Well, why?" They were mopping up and absorbing everything I said, and they were taking questions. And I said to this individual, "Yes, I agree with that. So if your objective was to demonstrate that you know the sector, you have achieved that objective. But what do we know about there? What do we know about their wishes are? What justification do we have for a follow-up meeting? What opportunities can we take?" And in my view, the answer to all of those questions was zero, because we had done a lot of talking and we had done no listening and asked virtually no questions. So there was no follow-up to that meeting. Opportunities created.
A really good example, and I think we can all connect with that. And is there a trick or a nuance to arriving when maybe someone's expecting you to offer a pitch or expertise, when you're there because you want to learn? Is there any tricks of the trade you can share with us today?
I think you have to be balanced on it. I think if a potential client has been kind enough to grant you an hour of their time, and if all you do is go in and ask them questions, then they may possibly feel that you've been a sponge, you've absorbed all the information from them, and you haven't given them anything back. So I do think you need to show a modicum of knowledge or some ideas for them, or you need to commit to revert to them after the meeting with ideas to address some of the issues that they've come up with. But you need to come out of every meeting having learned something about that client or their prospective client, what they want to do. And I think listening is the best way to do that. It's not an easy, the second part of the question was, how do you develop your listening skills? It's not particularly easy to do. You have to really actively concentrate on it. You have to ask questions, because that stops you from doing all the talking. One tip I can give is maybe prepare a list of questions in advance of every meeting you go into. But then also take notes, because the benefit of taking notes is as you're actually writing, you can be thinking of the next question. And the person you're having a meeting with will give you a bit more leeway if he or she can see that you're focusing on making notes and responses to questions. So it gives you a little bit more time to think about what your next follow-up question.
Love that. So go in with a balanced approach to listening and showing some expertise, having that list of questions, taking notes. I think these are all great tips. Thanks so much for sharing that. Challenges across your career, you've seen many, I'm sure. And we talked about McQueen when you set it up. And I know there was a financial crisis during that period as well. So that's certainly, I'm sure, one of the biggest challenges you had to overcome. But how have you overcome the challenges you've seen, and how have you used them to your advantage?
Well, I think every new role brings with it challenge. Economic downturns absolutely bring challenges with them. So do day-to-day issues like getting disappointing offers in on a business you're selling. I think you overcome most of them with two things, with positivity and also with lateral thinking. So let me give you an example. And it's a slightly old example, but it's not a bad one. After I got back from India, I went to see Diageo. I was talking about their India strategy, and that's how I got to know them. A month or two later, I got a call from the then head of M&A at Diageo saying, "Look, can you come and have a chat? I've got an issue, I've got a problem." So I went in to see him, and he shared his problem with me, which of course had nothing to do with India whatsoever. But because he'd got to know me and we'd had conversations about India, he was curious to see if I had any ideas. And essentially the problem was that Diageo and Pernod were joining forces to buy a spirits business called Seagram. And they broadly split the assets 50. And one of the assets that Diageo was going to own was a lovely super premium tequila business called Don Julio. And Diageo were keeping this asset as part of the split of the brands with Pernod. And relatively shortly before the deal was due to sign, their joint venture partner in another tequila business, Jose Cuervo, rang them up and said, "By the way, you do realize you have a non-compete and therefore you're not allowed to own Don Julio." Now, Don Julio was tiny and this was a this was not going to make or break the deal by any stretch of the imagination. And Diageo said, "That's a solution, that's fine. We'll just put it into the joint venture." And the joint venture partner said, "Yeah, that's a good idea. I value the business at X." And X was meaningfully lower than the business was actually worth. But this individual felt that Diageo would have no choice, and that's what they would accept. And of course, Diageo then got into, I wouldn't say big panic because it was brand, but it was one they wanted to keep. They didn't really want the situation of having to transfer it into the joint venture fraction what we were. So the head of M&A rang me up and said, "Have you got the ideas?" And I thought about it and I went back to them, and this is where lateral thinking comes in. And I said, "Okay, I've got an idea for you. Why don't we get HSBC to buy the brand? And HSBC will sell you, Diageo, a derivative instrument which precisely matches the economic performance of Don Julio. And therefore you will have all the economic risk of Don Julio, but you will not technically be in breach of your non-compete with Jose Cuervo because you won't own the brand." And Diageo thought this was absolutely inspiring and wanted to go ahead with it and do it. And to be clear, they weren't actually looking to circumvent the joint venture agreement. They just really wanted to put the business into the joint venture at an appropriate price rather than undervalued price. And they felt this strategy of the derivative instrument would achieve that. So that's an example of some lateral thinking. I can give you another example. We were selling a business a few years ago, a food business called Pork Farms. They're active in quiche, hot eating pies, pork pies, sausage rolls. And in all honesty, there was only one logical trade buyer, and that was Kerry's chilled and savory pastry business. And I knew the CEO of that business well, and he had told me they were very enthusiastic to buy. That was fine. He took on the engagement. Quite a long way down the track, he rang me up and he said, "Shaun, I don't really know how to say this, but I've just been told by head office that they don't want to do this deal, so we at Kerry are pulling out." Now, I reported the news back to my private equity client, and of course, as you can imagine, faces were very glum and everybody was very disappointed. And they said, "What are we going to do?" Because they were our obvious buyer. Indeed, arguably, they were our only buyer. And I said, "So let's turn the tables. If Kerry don't want to buy Pork Farms, even though we know there are very substantial synergies and logistical benefits of putting the two businesses together, why don't we approach them and see if they'll sell their business to us?" And my client said, "It's an interesting idea, but we don't want to put any more money into this business." And I said, "Okay, well, let's approach them about a merger." And that is exactly what we ended up doing. And I can't remember the precise percentage split now, but in simple terms, we merged the two businesses. Kerry was a 30 to 35% shareholder, and the private equity house that owned Pork Farms owned a minority stake in it. The synergies that were captured were substantial, and the business was sold a few years later successfully when it had been renamed Abbey's. We turned adversity into opportunity by looking at lateral thinking.
So creative thinking, lateral thinking, the positivity, there what's really stood you in good stead to deal with these challenges and to come out with wins, which is great. So thanks for sharing that. And I want to talk a bit about teams, I think, before we move on to really focus and drill into leadership. You've built teams in India, in London, you've set up your own firm. How did you do this successfully?
Do you know what? That's almost the easiest question you've asked me so far, apart from what's your name? The answer is it's all about recruiting and obviously retaining the right people. Because no matter how good any one individual is, to succeed, you need a really good team of people who play well together, supplement each other's skills, and work collegiately rather than in their own individual silos. And every job I've done in my 39 years of working in financial services, I've always focused on trying to put together the best possible and incentivize those people to work hard and work collegiately and help and support each other. And if you can deliver that and you get the best people, you get a fantastic result.
Perfect. And what about building the culture to help the team succeed? Any nuggets there?
I think the culture probably comes from the top in terms of being open and being collegiate and helping each other and going out of the way for each other. whenever I've interviewed people, I've always looked for those attributes. And if I find somebody who is too much of a sole trader and uses the organization without putting anything back into it, doesn't care for the learning or development of the juniors, then I don't want to work with those people. They will end up souring the entire team. And therefore focusing on getting the right team members in and the right culture, right from the word go is fun.
Excellent. Thanks so much for sharing that. And this is an investment banking leaders podcast, so I want to dive into that. For those who are aspiring leaders, what advice do you have for them to make it to the top?
Well, I think the skill sets differ depending on your seniority. So, for example, as a junior, you need to be willing to show great commitment and work long hours. And you need, I think, to have a real interest in the sector you're working in. Somebody much wiser than me once said, if you find a job joy, you'll never have to do a day's work again. And I think that is totally true. And if you're spending a lot of time in the office, you need to enjoy what you're doing, because then you'll throw yourself into it. You'll be energetic. You'll have a smile on your face. You'll get things done, and that will work. I think also as a junior, you need a great attention to detail. Yeah, you need to be highly organized. And although you don't need superb communication skills, you need to be able to talk frequently to those above you in the chain and those below you in the chain, so that you're managing expectations of them by way. Those are more the skills of the juniors. As you get to be more senior, the skill set changes. And in most investment banks, it becomes about your ability to win business. And that's all about learning about a sector or a product and developing relationships with clients such that they trust you and want to work with you. And that is how business is built.
And if I'm a VP who's in that area now, advice for becoming stronger at finding and winning business and making that step to be a really successful MD?
So my strongly held view is that specialization is really important here. When I started my career, you had senior bankers who might have a client in the pharmaceutical industry, one in building materials, one in financial services, and one in consumer. And they were experts in the skill set of corporate finance. They were not industry specialists. In my opinion, that model has changed dramatically over my period in the industry. And CEOs are now looking from their advisors. They're taking the corporate finance skill set as read. You wouldn't be where you are if you couldn't do M&A transactions or IPOs or debt capital markets or whatever it may be. What they're really looking for over and above is deep sector insight. And in some respects, the narrower your sector, the greater your expertise can become. And I see this not just in investment banking, but in other walks of life as well. So if there's something wrong with you and you're lucky enough to be able to get it treated at a place of your choice, we'll start maybe with a general practitioner and say, oh yeah, you've got a serious problem. But very rapidly, you want to find the very best person in the field of ear, nose and throat or cancer, whatever it may be. And I would draw parallels with the investment banking industry. Now, if you are in a subsector, if you're in the restaurant industry, you want to be talking to a banker who is an absolute expert in that restaurant. So that banker knows all the deals, knows who all the buyers are, knows what multiples have been paid, knows why they've been paid, knows what dynamics are necessary to make a business attractive and highly saleable, what buttons to push to appeal to potential trade buyers. And this comes from detailed subset knowledge. So as a VP, my strong advice is find a sector or a subsector that you really like and that you've hopefully done a deal or two, and immerse yourself in it. Get to know all the runners and riders, all the players in that sector, listen to what they want to do, and the deals will pop.
Really clear. Thanks for that. I think that's super clear advice. Hopefully everyone listening who's got an interest to take that step and be successful will take that on board. What about the training and the growth? So what's really helped you grow and develop as a leader? Obviously on the job, you've talked about listening for sure, but Are there certain training, mentors, books, podcasts? What's really helped you develop more and more as a leader?
It's a difficult question to answer. I do read business books, but I don't read many of them, if I'm honest. I like biographies. I think you can learn from other activities, whether it's military warfare, whether it's businessmen who set up their own business. I'm not definitively looking for an investment banking bio, but I think talking to people and listening is the most fundamental skill. I think being visible, being out, walking the floor. I think somebody coined the phrase management by wandering around at one stage. And I think that's valuable. I think the days when leaders sit in their ivory towers, in their closed offices, and nobody knows who they are not great examples. I'd much rather see somebody who's out and about, engaging with it, chatting to them, visible and approachable.
I love that. I've always, from a recognition standpoint, believed that you've got to get out and catch people doing things. That's a great way to celebrate successes and recognize teams. So I'm a big believer of that, walking the floor, as you say, and getting to know the team and listening. What about opportunities? We've had a bit of a challenging year, it's fair to say, but for a leader today, what do you see as the biggest opportunities for them to succeed?
Well, I think it comes down to a number of things. I think firstly, the leader needs to work out what the goal is, what the strategy is for the part of the business that he or she is leading. So have a strategy, communicate it, and stick to it aggressively, and don't get distracted. We all have so many potential distractions in our day-to-day life. We have so many unexpected emails, texts, phone calls, messages on LinkedIn, whatever it may be. And I think to be very focused on what the direction of travel is, and to be constantly saying, I'm spending time on this. Is this going to help with my objective? Is this going to help with my goal? Is this going to help deliver the strategy? Then that helps you make the right choices as to where you spend your time.
So really being laser focused on that vision, on that strategy, not getting distracted or taken off path, and keeping consistency. I think you shared with me that's been a big key to Houlihan's success, right? The consistency of the travel in terms of the vision and the leadership. Is that fair to say?
100%. We have at Houlihan Lokey, we have an extraordinary longevity of the senior people. We've got individuals who have been in the firm since pretty much it started in 1970. The current chief executive, I don't remember how many years precisely he's been in the firm, but well over 30. And he was head of corporate finance before he became the group chief executive. And having that continuity of strategy, that pure focus, vision and direction of travel is fundamental. We, from our very early days, we've been 100% advisory based. Stuck to that model. We haven't got distracted. We've been very focused on building sector teams, and we stuck to that model and not been distracted. There was a period at an earlier employer in my life when I think I had 8 different bosses in a 12-month period. And every single one had a different view and a different strategy. And we were U-turning, we were zigzagging all the time, and it was very difficult to build up any momentum. A bit like my golf, actually, hitting one side of the fairway to the other, rather than going straight down the fairway. And I'm glad to say that Houlihan Lokey is more of a straight down the fairway employer.
Nice, really clear. Thanks for sharing that. What about challenges then? We talked about opportunities for leaders. What do you see as the biggest challenges for leaders to be successful today?
I think the availability of information to everybody now is substantial. The internet has created so much more information. I occasionally have conversations with some of the junior team about what it was like when I started out in the industry. We had a tiny fraction of the information that is now available. And therefore, a lot of decisions were made much more on instinct. Now there is almost an overload of information, and therefore trying to work out which information is genuinely relevant and critical in determining to take the business.
Interesting. And any ideas or tips for the audience how to navigate the information overload to an extent that they may face?
Difficult one. There is just so much information out there. But find a methodology that works. Don't go down rabbit holes. When you're doing your research, stick to the core research of the company you're looking at or the sector you're looking at, and try not to get too distracted by going off on tangents, which is easily done.
Super. Thanks for that. One final question in the leadership area before I start getting you to look forward a little bit. In terms of recognizing success, Outram is a recognition company. We know the investment banking industry doesn't always get the best reputation for recognition. Any advice on how to recognize teams successfully?
I think celebrating each deal is really, every time we complete a deal, we will celebrate heavily, both internally, but also with the client. And actually, if the deal has been a particularly successful one, then the celebrations can be quite substantial as well, which is not I think a team went out to see the Formula One in Singapore last year, for example, as a memento of the success. We've certainly had dinners in Ibiza and one or two other things of that nature. If the deal has been really successful, celebrate it properly. Make sure you've got a tombstone for each deal you do, and make sure that you've got a case study and make sure that everybody feels part of that success.
Amazing. Yeah. And we're proud to be your partner on that deal to end tombstone front. So thanks again on there, and celebrating the deals, as you say, it's key to building that relationship internally and externally, right? So thanks for sharing. So let's look forward a little bit now. I'll get you in forward mode. That's where you prefer to be, you said. We've experienced a tough period across the last 18 months, it's fair to say, but what are the biggest opportunities for the investment banking industry moving into 2025?
I think AI is going to change our industry in the same way it's changing everybody. I think the transitioning to more environmentally friendly practices is going to change the industry as well. And I think bankers themselves need to be innovative in their approach to challenges in order to open up new avenues for growth. I think on a smaller level, on a more immediate level, we seem to be in an interest rate environment where the next movements are likely to be down. Well, I don't know when people will be listening to this, and it could have changed by the time they're listening to this, but as we sit here recording this, the interest rate cycles, and that should be generally good for deals. There's a high correlation between being able to borrow money relatively cheaply and the ability to pay up. And clearly when buyers are willing to pay up, then vendors are more inclined to sell.
Excellent. Thanks for that. And recording in September and publishing next month, October. So hopefully not too much change between now and then. What about AI? You touched on that. Any insights on what particularly for AI and the industry?
I think it's incredibly early days. I think a lot of the basic work that has traditionally been outsourced to analysts can end up being done by AI. I think the analysts know that, and they're probably better at using AI than somebody in my generation. So I think each of the analysts needs to be embracing AI as a way of progressing their own career, because if they can get AI to do some of the basic work for themselves, and then they provide the manual overlay and the tidying up, then that will make them more efficient and more productive and will help progress.
Amazing. I had read an interesting article by Craig Coburn, ex-banker, very senior, who writes a lot. And his insight in there was talking a lot about working hours and how demanding the industry was, and how AI, you feel, is something to come in and help. Actually, the expectations of the clients for how much time you spend with them may increase. So I thought that was a really interesting take, actually, that I hadn't heard or looked at before. But what about on the challenging side? What are the biggest challenges potentially you see for investment banking moving into next year?
The IPO market has been difficult for a while, and I'm really looking forward to that coming back. I think particularly for some of the bigger companies owned by private equity, where maybe they're on their third, fourth iteration of private equity ownership, then being able to undertake IPOs will be very helpful for them in terms of getting exits and monetizing their investments. The stock market has seen a pretty significant decline in the number of listed companies over the years, and it'd be nice to reverse that. So look forward to the IPO market recovering. Otherwise, I think the other sort of major issues in the industry is disintermediation. It's always been, if you like, our biggest competitor is individuals believing that they can sell their own business on their own without an advisor. How difficult can it be? And certainly my own philosophy in life to be very good at something, and then somebody will ask you to do it. You need to do some home decorating. Sure. Everybody can paint a wall or maybe put up a shelf or do a bit of basic joinery, maybe even do a little bit of basic plumbing. But most people are probably not as good as those that do that for a living and have done it for many years and can do it not just much better, but much quicker. And therefore my own personal philosophy has always been to get other people to do that for me. And I'm happy to pay them for it because I can use that time more productively, more interestingly in what I'm good at, which is M&A and investment banking.
Definitely. I can do some DIY, but I'm sure my wife would prefer that a professional did it. That's for sure. But I can definitely relate to the analogy. Let's look back to the start of the career. Is there a particular transaction that you're most proud of in your career, and why?
I think I've completed over 400 transactions in
Wow.
my career. So it's not easy to pick one, but I've got a saying which the team will recognize, which is that you're only ever as good as your most recent transaction. And you have to be really super hungry on every transaction, because the moment a client detects some ambivalence or some complacency, then you're in trouble. So I'd actually pick one that was a very recent deal that we signed in the last month or two, which was the sale of Princess Foods and by Mitsubishi in Japan, which we sold to an Italian listed company called Newlat. And the reason I pick it, apart from being recent, is that we had a few challenges. The challenges were to do with geography when you're dealing with a Japanese client and an Italian buyer. And for those who understand the stereotypes in the Japanese and the Italians will probably have a little mild laugh at the concept of those two cultures clash. But it was a complicated business as well. It was active in a number of different sectors. It did a lot of canned fish, it did juices, it did edible oils, it did Italian foods. It wasn't an easy business to pigeonhole, and it had numerous factories across numerous countries in Europe and further afield, including Mauritius. But what also made the business complicated was that it had suffered, along with most food businesses, quite badly after the Russian invasion of Ukraine in March, when in the following months raw material prices shot up dramatically, energy prices shot up dramatically, and the profitability of Prince's was impacted by this. And trying to juggle a timetable that meant that we could get value based on normalized trading rather than trading that was adversely impacted by high input raw materials, high energy prices, is complicated. And we had to slow down round two quite dramatically in order for the trading results in the business to come through and encourage the bidders to increase their offers, which we successfully did. We also had a situation with the buyer who at one stage decided they were a bit nervous about the outcome. Therefore, the business would work less. And we managed to persuade our client to hold fire, be patient, and sure enough, after 3 or 4 months, we managed to get the bidder back at the price that they'd originally indicated. The deal at the value of 700 million sterling, or just $1 billion, which was an outstanding outcome for the client in that circumstance. But it was quite a long and drawn out transaction. It lasted longer than most, but it could sign finally for the summer.
Congrats on that recent success. And I can understand why it required a bit of that lateral thinking and experience that you've talked about throughout the session today. So if you went back and talked to yourself in the early part of your career now, what piece of advice would you have given yourself?
I think probably the biggest piece of advice is don't take adversity personally. And what do I mean by that? There are times where things don't go well. Yes, of course, there are times when it's because you haven't done particularly well, missed something you shouldn't miss. But there are times also when it's the macroeconomic conditions, when it's the market, when it's the firm you're working for. And don't take it personally. And equally, when you're pitching for a piece of business and you don't win it, and unbelievably, that has happened to me, I think at least once in my career. Again, don't take it personally. Reflect on what you could have possibly done better. Try and be constructive. Try and look at it as a team about what we could have done differently. but recognize that it's just not possible to win every single piece of business that you pitch for. And if there are lessons to be learned to improve your success and your pitch rate, then learn those lessons. When adversity comes, learn from it and don't beat yourself up on it. It happens to all of us.
Yeah, I love that. Take a step back. Don't take it personally and see what you can learn back into that growth mindset that's obviously stood you so well across your career. Believe it or not, Shaun, we're coming towards the end of our time together. So a couple of questions to finish off. Is there a particular book or a podcast or a material that you recommend to the audience that's had an impact on you? I know you said biographies before. So is there a certain suggestion or recommendation you have for our audience?
Business leaders are always interesting. I've liked reading some of Richard Branson's work, some of Tom Peters' works, and a number of books on how people achieved what they did achieve. I think you could, as I said earlier, you can learn from all disciplines. You don't have to focus just purely on financial purposes.
Amazing. Definitely grab a couple of examples and pop them in the show notes for those that want to learn from other successful leaders as well. And to wrap, is there anything I haven't asked you that you think the audience should know?
Gosh, I'm not sure if there's anything specific. I think my biggest piece of advice to anybody setting out in this journey is be enthusiastic, try and learn every day and find a role that you really enjoy and work with good people. Life is too short not to work with good people that inspire you and enthuse you and make the day pass.
Amazing. What a great way to end. So I hope the listeners take that on board. Shaun, I know how busy you are, so thank you so much for carving out some time for me and the listeners today. We really appreciate it and really enjoyed your insight.
Been my pleasure. Thanks for having me.
This episode was brought to you by Outram, the global leaders in the financial deal gift, awards and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us. And until next time, best of luck on your growth journey.